At the desk with me to discuss the potential fallout from Greece and EU talks breaking down is Nadir Thokan. He's from 27/4. Nadir, always a pleasure to have you. Maybe let's get into the stage of where the discussions are at the moment. They're not working out very favorably, and we're against time because there's a deadline at the end of this month.
Yeah, you're absolutely right, Gugu. So I think the crucial deadlines are, the end of this month. Obviously, the European Commission needs to know where they stand with regards to backing up the 172 billion euros of Greek debt. Now, the purposes of these talks was that, obviously Syriza, the fairly left-wing far left-wing party in Greece, was voted into power on the back of, ending austerity and, really breaking away from the harsh austerity which the European Commission, led by Germany, had imposed on Greece in order to meet certain conditions to receive bailout funds so that Greece doesn't default on its debt. Now, where we stand is that, Syriza doesn't seem to be budging. We saw the finance minister of Greece, Mr. Yanis Varoufakis, walking out of talks with the European Commission, on the back of the European Commission not budging in terms of they must meet certain conditions set out in order for them to qualify for the bailout and continue to have the financial backing of the European Commission. Now, where we stand at the moment is that obviously it's become a bit of a game of chicken between the European Commission and Greece. And if you can put an analogy to it, it's almost like two trucks are approaching a one-lane bridge, and neither truck is willing to, and each truck is going to see who swears first. Is the European Commission gonna buckle first, and in order to shore up confidence in the markets, going to say yes, Greece can renege on certain conditions within the bailout agreements, or is Greece gonna buckle first and say we'll go ahead as promised with the austerity plans so that we can continue to receive bailout funding? So for the time being, all options are still a possibility. A Greek exit or a Grexit from the Eurozone is still certainly likely, and that will obviously have ripple knock-on effects onto investor confidence and what that will mean for emerging markets. But, I don't think we're there yet. I think the fact that the Greek authorities, led by Mr. Alexis Tsipras, said that they're open to some sort of negotiation with the current plan with the European Commission, just subject to certain conditions being lifted in order for them to qualify for the bailout. They're open to those discussions. So I think we should see a meeting of the parties in the middle somewhere over the next 48 hours or so, and we should see crisis averted. But all in all, the Eurozone and Greece still not in a good position.
I would think that this is obviously a good time for Greece maybe just to cut their losses and accept the fact that maybe, as you say, that truck needs to swerve first, given the fact that they've potentially dug themselves into the stock pit. Why aren't we seeing that taking place? Is it because of the strong leadership, as you've mentioned, that has now been elected?
Well, Gugu, I think the biggest issue is that, what got them popular and what got them voted into power is anti-austerity. Now, I think there'll be a massive backlash if they sort of just crumble or buckle or crumble like a house of cards under the first sign of pressure when the European Commission turns up the heat in order for that austerity to continue. So Mr. Tsipras' ticket was really, I'll put an end to austerity, and we'll negotiate more firmly with the European Commission led by the Germans, and we'll renegotiate debt restructuring for Greece, which is favorable to our population, because really speaking, we've seen unemployment skyrocket in Greece. Austerity has been exceptionally harsh. We've seen them going through pretty much recession ever since the global financial crisis, and we're seeing no relenting in those harsh, biting economic conditions. So I think the biggest issue for the leadership at Greece at the moment is that their ticket was really, we'll stop or we'll curb austerity to a large extent. And, if they just buckle to the European Commission now, that will really be seen as a failing to their people, and they could lose a significant amount of popularity there.
Tell us about our view as a South African economy, as an emerging market. Why should we be concerned about this?
Well, I think certainly over the short term, I think the biggest concern is obviously that, if there's a Greek exit or if there's a default on Greek debt and no agreement reached between the Greeks and the European Commission, what we'll see happening is that investor confidence will undoubtedly be dented. And when investor confidence is dented, the first assets they tend to sell are the assets they consider to be most risky, which is emerging market assets. Now, that will obviously see massive outflows out of emerging markets. markets. And the added problem for South Africa is that we're a very liquid emerging market relative to, say, Turkey, India, Indonesia, Brazil. The South African rand is a really liquid emerging market currency. So foreign investors know they can get out quickly. And when global investors run to the hills for safety, we're going to see a massive sell-off in South African assets. We're going to see our bond yields probably spiking. We're going to see quite a strong depreciation of the rand, which is obviously going to be going to counteract some of the gains we've made in terms of moderating inflation. That's going to be counteracted if the rand continues to depreciate. Obviously, if our bond yields spike, that's not good for us because it costs more for us to borrow money. And generally speaking, there'll be a sell-off in emerging markets because there'll be significant risk-off sentiment. And then, moving into the medium and long term, obviously a dire European situation is bad for the South African economy because they're our largest trading partner in combined the European Union. Now, if there's a crisis of confidence as to where the European Union is going and, what shape or form is it going to take in the future, we're obviously going to see subdued economic activity there, and we're going to see less trade with the South African economy, which is not good for things like GDP growth here, which is already under pressure, and our current account deficit and those sort of things. So short term,
we're going to have to leave it there, unfortunately.
100%.
We have run out of time.